Most people watching this right now might be scratching their heads. Why is silver falling? And sometimes quite sharply, even though global tensions, wars, geopolitical risk, and inflation fears are rising. In simple terms, it's a paradox. Global uncertainty usually boosts precious metals, but silver, in particular, has behaved very differently in 2026. Today, we're going to break down all the real market drivers, the psychology behind this, and what traders and investors should watch in the coming weeks and months. To begin with, what we're seeing right now is not typical behavior for precious metals. Usually, when geopolitical conflicts flare up, particularly conflicts involving major global powers, investors flock to what are considered safe havens like gold and, to a lesser extent, silver. But in early 2026, silver's price has fallen more than many expected, even while tensions in regions like the Middle East continue to simmer. We're talking about a significant drop in price through March 2026, with silver retreating toward the $68–71 per ounce range after being substantially higher earlier in the year. Let's unpack the forces behind this and explain why silver is dropping despite global tension. The first key driver to understand is interest rate expectations and monetary policy, especially in the United States. At the start of 2026, markets were pricing in multiple rate cuts by the Federal Reserve, which would typically weaken the US dollar and push commodities like silver higher. But as the year has progressed, that expectation of rate cuts has evaporated. Instead of a softer monetary policy, markets are now pricing in no rate cuts and, in fact, a more hawkish stance from the Fed, meaning rates may stay higher for longer. This subtle shift has major implications for silver. A stronger US dollar makes dollar-priced commodities more expensive for buyers in other currencies, reducing physical and futures demand. At the same time, higher interest rates, or the expectation of them, increase the attractiveness of yield-bearing assets like treasuries and reduce the relative appeal of non-yielding assets like precious metals. Many traders, especially those using leverage, simply shift their positions away from silver when yields rise and rate cuts appear less likely. As a result, silver has been pressured downward even though geopolitical tensions remain high. So how does this explain something that feels counterintuitive? Namely, a falling silver price during global tension. The answer lies in the relative balance of market forces. While geopolitical risk should support safe haven buying, that force is being counteracted, and in many cases overridden, by monetary tightening pressure, stronger dollar strength, and changing rate expectations. This is not just anecdotal. Data shows that silver's recent declines have occurred while markets reassess interest rate paths and the strength of the dollar, a dynamic that has hit commodities broadly, not just silver. The recent 15% drop in silver prices that analysts acknowledged was real, even though gold also fell by a smaller amount, reflects this shift. Another major driver that sets silver apart from gold is industrial demand. Unlike gold, which is overwhelmingly a store of value and safe haven asset, silver is also a highly industrial metal. Over 50% of silver's demand comes from industrial uses like solar panels, electronics, and EVs, electric vehicles. This means silver reacts not just to monetary policy and geopolitics, but also to economic growth expectations. When there are signs of slowing economic momentum, or fears around growth, industrial demand expectations fall, and this pushes silver lower. Industrial demand makes silver more cyclical and sensitive to economic growth compared with gold, which is more defensive. So when traders see economic uncertainty or recession fears, they may sell off industrial metals, including silver, even as safe havens like gold hold up better. This double sensitivity makes silver a kind of hybrid asset, both a precious metal and an industrial commodity. That hybrid nature is key to understanding why silver can fall, while gold might stay elevated or fall less. A third force weighing on silver right now is profit-taking and technical selling. Throughout 2025 and into early 2026, silver prices surged dramatically, at one point reaching record highs well above $100 per ounce. Higher prices attract speculative trading, and when prices pull back, many traders trigger stop losses, liquidate positions, or book profits rapidly. This kind of cascading sell-off can accelerate price drops, especially in a smaller, more volatile market like silver's, where liquidity is thinner than gold's. In fact, some recent market behavior suggests that even geopolitical tensions like the Iran conflict have not translated into straightforward safe haven buying for silver. In certain sessions, silver prices plunged alongside broader commodity markets, sometimes even faster than gold, as investors moved to raise cash or reposition into other assets they saw as more liquid or immediately profitable, like oil or stocks. Another piece of context comes from recent actions by states. For example, in an effort to manage volatile silver prices and discourage speculative demand for collector coins, Germany reduced the silver content in some of its euro coins for the 2026 edition. While this policy change was partly driven by budget considerations, it also underscores how volatile prices have been, rising earlier, then sharply correcting, to the point that governments are adapting to manage the impact on their programs. Silver's short-term technical picture also reflects bearish forces. In late March, spot silver hovered near important support levels around $67 to $71 per ounce, which traders are watching closely. Technical indicators as of late March showed a bearish structure with pressure building from moving averages and downward trends. Unless buyers step in at these levels, prices could easily slip further as traders react to short-term signals. So when you put all of this together, hawkish monetary policy, strong dollar strength, industrial demand concerns, profit selling, and technical selling pressure, it becomes clearer why silver is falling despite global tension. The safe haven signal from geopolitics is simply being outweighed by the combined effects of monetary and economic factors right now. Now let's pivot to what could happen next and where silver prices might head going forward, which is what most traders and investors really want to know. There are a few broad scenarios to consider. Scenario 1, continued pressure and lower prices. If the Federal Reserve continues to signal no rate cuts and the US dollar remains strong, while industrial growth falters, silver could push lower in the short term. In this case, the key levels to watch are around support zones near $65 and even $60 if selling intensifies. Breaching these areas could extend losses further, especially in a market where short-term technical traders are waiting to capitalize on weakness. Many analysts have warned that if macro pressures remain in place, silver could fall below recent ranges before stabilizing. Scenario 2, consolidation and range-bound trading. Silver might also enter a period of consolidation, where neither buyers nor sellers dominate. If prices stay around $67, $75, that could reflect a market waiting for big catalysts like U.S. economic data, major central bank meetings, or clearer geopolitical developments. In this scenario, traders should expect volatility, but perhaps not dramatic directional moves. Instead, ranging and testing both support and resistance zones until a trigger pushes markets decisively. Scenario 3, reversal with macro or demand shifts. On the bullish side, there are scenarios where silver could rebound strongly. For example, if the Federal Reserve suddenly pivots toward rate cuts in response to slower economic data, or if dollar strength weakens, silver could rally off its lows. Moreover, long-term structural demand, especially industrial demand for solar panels, electronics, and electric vehicle components, remains robust. Most forecasts suggest that even with cyclical dips, global silver demand is expected to outpace supply for the 6th consecutive year, meaning the market remains physically tight and structurally supportive over the long term. Another bullish driver could be renewed safe haven flows if geopolitical conflict escalates unpredictably. In such scenarios, silver could begin to behave more like gold and attract renewed safe haven investment, but this generally requires either a change in global risk sentiment or monetary easing that weakens the dollar and real yields. So where does that leave traders? For short-term traders, this market demands caution. Silver's price action has shown sharp swings and volatility remains elevated. Watch key levels around support at $65 to $67 and resistance near $75, no spitting him lower. Breakouts below support can trigger quick sell-offs, while moves above resistance could signal a reversal phase. For medium-term traders, be ready to monitor macro catalysts, especially upcoming Federal Reserve decisions, U.S. inflation data, and changes in industrial demand signals from key markets like China and Europe. For long-term investors, remember that silver's fundamental drivers, including supply deficits and strong industrial demand, remain intact. Even though prices might be volatile in the short run, structural demand trends are supportive over months and years. In summary, the reason silver has been falling despite global tension is that the macroeconomic forces, particularly the strong dollar and shifting rate expectations, are currently dominating the geopolitical narrative in markets. While safe haven demand should theoretically support metals during periods of conflict, silver's hybrid role as an industrial metal makes it more sensitive to broader economic pressures than gold. Add in profit selling and technical selling, and you get the paradox we're witnessing today. That's why silver is falling right now, and that's where the market might be headed next. If you found this video valuable, make sure to smash that like button, subscribe, and hit the bell so you don't miss updates as silver continues to move. Drop your thoughts in the comments. Do you think silver will rebound despite pressure, or are more losses coming? Let's discuss.